Everyone, welcome back to my channel, Shoulders of Giants. If you're new here, welcome, and if you've seen my previous video, welcome back. Today I'm gonna talk about a new topic that I think is pretty interesting. It's called REITs. It stands for Real Estate Investment Trust, and I'll go through them and I'll talk about the pros and cons of REITs, and also talk about some of my favorite ways as a Malaysian to invest in REITs. Okay, let's get started. So what are actually REITs? So for REITs, you can think of it as so it stands for Real Estate Investment Trust. You can think of it as sort of like owning property, but not actually owning like the entire unit. So like let's say a company, they own many properties and portfolio in their portfolio they own like different kind of properties. So when you buy into a REIT, you buy like a small portion of that property, and you basically enjoy all the benefits of owning a property without actually owning the physical property. So you enjoy if the property goes up in capital gains, if the property's rental yield goes up, you enjoy it in the form of dividend. So I prepared here like a small session of like the pros and cons of REITs. Um, as I said, you enjoy the effects of owning property. And since REITs are like stocks, you are able to start small and dollar cost average in. So let's say if the REITs can be anywhere from like five, 5 ringgit, 10 ringgit, and depending on the country it's from, and you can just dollar cost average in and start small. And one thing also I really like about REITs is consistent dividends, because REITs, their main source of income from REITs is rental yield. So if a REIT has a lot of good property, they usually give a pretty good dividend. So some of the cons on REITs is that it could have slower growth than the stock market, because traditionally REITs are properties, and properties grow slower than some of like the stock market companies, because like in the stock market anything can happen. Suddenly a company can just shoot up in value because of like uh, suddenly there's a turn of events, or they innovate some new product, and their stock price goes up drastically. But in a REITs, it's pretty standard. You own a bunch of properties, you get a rental yield. There's not much innovation per se, so it has slower growth than the stock market. And another cons is might be the lack of control of your investments. So in a REIT, usually they have a few properties inside one REIT, and then some REIT index even combine bunch of REITs into a REIT an index to track like a bunch of other REITs. So you don't really have individual say on like what property you want. You can browse around, but eventually, like the difference between owning your own property is like, let's say you own a condominium, you can go and like refurbish it, renovate it, choose your own furniture, choose your own rental price, and you can control and tweak how much of your return is. But on the REITs, you basically have to trust the company managing all these properties, and trust that they are doing the right job and they are maximizing the returns for you. So those are the pros and cons. And now going to my one of my favorite way of investing in REITs as a Malaysian is investing in Singapore REITs. So why as a Malaysian I choose Singapore REITs? So I know that in Malaysia there's also a lot of REITs in the Malaysian market. Um, they have also pretty steady returns and good amount of dividend. But today I want to focus on Singapore REITs. So why do I choose Singapore REITs as a Malaysian? One thing is that it has shown good historical returns. Later I'll show you some of the charts. And another is that Singapore has limited space of land. So if you think about it, right, Singapore is like a small island, and it has limited space of land. So if a company is managing a few properties in Singapore and they are in prime locations, usually my estimate is that it will go up, and in the future it would just be harder and harder to get space and property in Singapore. So so it makes sense that Singapore REITs give a good return in terms of just capital gains and also dividends. And other kind another reason I like Singapore REITs is that it has no capital gain taxes. So any appreciation in the REITs price, you won't get taxed, and it has very low dividend taxes. So if you look around REITs from other countries, let's say REITs from the United States, they have very high dividend taxes, up to like 30%, and capital gain taxes are also there. So this is some of the attractive point of Singapore REITs. It has no capital gain tax and very low dividend taxes. So how do I invest in Singapore REITs as a Malaysian, right? So one of my favorite way is through this platform called Scythe. Now I'm not sponsored by Scythe or anything, but this is one of my favorite ways to invest in REITs in Singapore. The thing is, Scythe is a portfolio manager. They actually have three types of portfolios. One is global ARI, where they actually pick and choose indexes and stock indexes from different markets around the world. And REITs, this one is they focus on REITs in Singapore. And Equity 100 is basically all US equity stocks. So today I'm just going to focus on their REITs portfolio and see what they offer. So in Scythe, they offer this XGX IHS REIT Leader Index. And in this REIT index, right, they actually have a bunch of REITs inside. They have Ascendas Real Estate Investment Trust. This is one of their highest holdings. And then they have Maple Tree Commercial Trust, Capital Land. As you can see, their 2019 return is 24.3%. That's actually very high for REITs and 5.7% dividend yield. So if you add the dividend yield and their returns, it's very good returns for REITs. So Maple Tree, look at this, 52.6% and then 5.2%. So in Malaysian REITs, they can also achieve this kind of dividend yield, which is like 4 or 5%. But their returns, I have never seen such high returns in Malaysian REITs. But in Singapore REITs, it's pretty common to have like 20 to 50% in capital gains in their returns. So it's pretty amazing. The results are amazing. Um, I can show you the SGX REITs index. So this is the IHS REITs index that Scythe tracks. You can see the 5-year chart here. It grows pretty steadily, and then there's a drop here because it's the pandemic in the March here, and then it's slowly rising back up. And my take is that it will just continue to go up because, as you know, Singapore's government, I'm pretty confident with Singapore's government that they know how to control the whole situation and actually bring back the economy into somewhat of a normal stage and grow from there. The fire chart is growing all the while. There are some dips here and there, but overall the trend is going up. And and if you want to look into further detail of what's in this SGX IHS REIT index, you can click here. I've clicked here and I've opened it. So over here they show you the return. Let's say since 2010, right? 1,000 to peak here is more than 2,500, more than 2,500. So it's like more than 250% gains in the span of 10 years. That's actually very good for REITs. For I'm sorry, for REITs. You can see here they show you the returns, 5 years, 3 years, 1 year. So of course this 1 year is a negative, mostly because of the pandemic. But overall the trend line for Singapore REITs is very strong. And here you can see what they hold. So these are the top 10 constituency. They show you the index weight. So 11.33%. Maple Tree is 8.89. So they hold a total of 33, but they didn't list out every one of their REITs here. They only show the top 10. And you can again look at their performance. The performance is pretty good. And I could say if you want to diversify your portfolio, investing in Singapore REITs is something you can consider. So why do I like Scythe here? So I like Scythe here is because they charge the fees that they charge you is by percentage, so it's 0.4%, and they allowed foreign investors. You don't need to be a Singaporean. You can be a Malaysian, not even residing in Singapore, and they let you open an account. So the good thing about proportionate fees is that you can do this strategy called dollar cost average. So let's say you can put 100 Singapore dollars in per month, and the next month you put in $100. The fees that they charge you will not go up or down because it will be proportionate to your uh, portfolio. So it's proportionate to how much you put in. And when you dollar cost average, you catch the highs and the lows. Let's say this month the REITs is a bit lower, but you buy in. Next month the risk is higher, you also buy in. So you dollar cost average up. You can see in Scythe website, some years the risk goes down, some year it shoots up, some year it goes down. There's like a cyclic trend here where it goes up every 2 years. I'm not exactly sure why, but apparently this is the trend of the REITs portfolio in Singapore. So it goes in a cyclic phase. Um, so one of the ways that I recommend if you really want to invest in Singaporean REITs is actually to open a Singaporean uh, dollar bank account as a Malaysian. So as far as I know, there are two options right now, Maybank and CIMB. You can open a Maybank and CIMB account that holds Singapore dollar while not being in Singapore. So these are the two banks, as far as I know, that they allowed it. So I own Maybank, it's called iSavvy account, and they help me hold Singapore dollar. So from there, I can use my Maybank Singapore account to invest in like Scythe or like other investment platforms in Singapore. So I highly recommend Malaysians to check out and open a Singapore dollar account and invest in our neighboring country here because they actually have really good returns and their financial market is more mature than Malaysia, and they have a lot of let's say they have also a lot of like robo advisors, brokerage that access to international markets and stuff like that. So um, what else do I want to say? Oh yeah, so like all these investment trusts, you can go in and just Google search them and look what they manage. So like Ascendas REITs, they manage a bunch of properties. You can go in and see that they manage Singapore, Australia, UK, US, and Mapletree too. They manage Vivo City, commercial space, malls, banks, towers. So, so not all the REITs are the same. Some they manage like retail, some they manage hospitals, some they manage like malls, and they all manage like different kind of things. So the REITs index, this S-REIT index actually is pretty diversified. You can sort of think like when you buy into this REIT index, you're basically buying a piece of like the buildings in Singapore. So because it's so diversified, you're getting all the diversification and returns of Singapore REITs, whether it's their malls, their hospitals, their office space, their condominiums, whatever, their hotels, everything. So I think it's a good way to diversify your investments. And again, here's are the pros and cons of REITs. You enjoy the effects of owning property. You can start small, dollar cost average in, so you catch the highs and lows of the market. You get a consistent dividend. And again, the added bonus fact of Singapore REITs is that there's low capital gains and taxes and low dividend tax. And yep, and yeah, here are the cons again. So that's it for today. And if you enjoy my content, remember to like and subscribe. And you can comment down below whether you actually want to go forward in investing in Singapore REITs or not. Let me know. And if there's a lot of requests, I'll make a further video on that. And if you'd like to know how to create a Singapore bank account as a Malaysian, please let me know too. Um, I would try to create a walkthrough of that video if there's enough demand. And thanks for watching the video today, and I hope you have a nice day.